Welcome back to our holiday special at the Business Insider. We're going to be discussing some of the big themes of the year. I'm joined with my colleague and partner, John Carney. So let's get right off to it, John.
All right.
It's absolutely crazy year. Let's just what's the big story surprise of the year?
The big story is the reversal of expectations. That, for one thing, the market ran totally contrary to what everybody said was going to happen. And now everybody's expectations are totally flipped from what they were a year ago. So 2009 was the year of the great reversal.
And what were we talking about back in March?
Everybody thought the world was ending,
including us.
We thought it too. We were, people were stocking up on guns. Gun sales were shooting through the roof. People were talking about, how much water do you have to have in your apartment to survive if the water system shuts down? It was epic end of the earth time. And then the market proved that everybody's an idiot. Nobody knew what was going to happen, and it just shot right up for most of the year. We've hit a slump now, but for most of the year, it was a tremendous rally that everybody badmouthed from the very beginning. As soon as it started, everybody said, it'll
last a month. It's a sucker's rally.
Right.
Get
It'll
out
last
now.
a week,
Take your
a
profits.
month. Yeah,
right.
exactly. And
including a lot of the smartest people who saw the collapse coming.
Right.
And they couldn't appreciate when it turned around. And what are some theories? I mean, I guess the big one is Fed liquidity and the actions of Ben Bernanke just absolutely pushing dollars into every corner of the world. That seems to be the big, if you're going to point to one thing.
I think Fed liquidity, helped fuel a massive demand for people to, use those dollars to go out and do something. I also think that there was one of the things that kind of an unspoken thing that happened this year is with all the unemployment happening, people weren't starting new businesses. So money that could have been, put into somebody, founding a new company, instead just went into the stock market. I think that helped do it too.
So let's talk real quickly. What do you think what's the consensus now? I mean, what everyone
the consensus now seems to be it seems to be that we're going to have a few more up months, and then sometime in the mid, it depends. The more aggressive bears say, it'll be first quarter, sometime, then things will drop off. Some people say, no, the rally will last into summer.
Yeah.
But everybody believes.
I've seen a million research reports, and they're like, things will be good for a while. We have a few more months, and then the tightening will begin.
Right.
And then Ben Bernanke is going to have to act to stave off inflation. That's going to kick the stock market.
It'll either be Ben Bernanke, a foreign crisis. The causes are overdetermined, but everybody thinks sometime 2010.
And of course, everyone thinks they're going to be smart enough to sell when that happens.
Right.
Because it's one of these classics. It's like, well, we know we're in a little bit of a bubble or something, but you have to keep riding it out. Just the key and make sure that you definitely sell.
Right. They say, we might be slightly
as
early.
If it's going to be, as if they really are going to ring a bell and it's going to be really obvious.
Right. Exactly. That it'll just happen. I mean, what will really happen is the market will do something again that nobody expects. Either it will keep going up and it will again be the second most hated rally ever, or it will start to go down too early for people, and they'll say, oh well, but this isn't the downturn.
Yeah, right.
This is, don't get out now because it's going to go up a little more. And what all this proves is that people who think that they can time the stock market, that they know the direction it's going to go over any short-term period, are just wrong. Nobody gets it right, and it's probably, this is a great lesson in that for the investors everywhere to learn.
And then real quickly, just sort of let's talk about a few of the bigger risks for
I think sovereign defaults is a huge risk.
That's become, in the last 2 weeks, that's all anyone's been talking about.
Well, it started with Dubai, right?
Yeah.
And that focused everybody's attention. Now everybody's saying Greece, but you have Spain, Italy,
right.
These countries near large bodies of water, I guess.
Right.
Well, I guess that's all countries, but you really want to. Right now, there's a very strong chance, because one thing that governments did very poorly during the boom years was put in any fiscal discipline. They all had deficit spending when their economies were going great. So once the economy started to tank and they had to ramp up the debt, has become a sort of destruction at a massive economic scale, and there's no way for them to get out of it.
Right.
So I think the sovereign debt is probably one of the big crises. The other will be accounting scandals. We're going to have a lot more accounting scandals, and that also tends to sap confidence in markets. It's the old Warren Buffett line, when the tide goes out, you see who's been swimming naked. I think we're not going to see accounting scandals just in companies, but entire countries. We don't know sort of how the Chinese GDP, how accurate is that calculated?
Right.
If we start to get some indications that those things are phony, investors may panic, pull their money out, and we may have nation states turn into Enron or WorldCom.
Well, let's hope not. Anyway, thanks for talking to me.
Thanks for having me.
Yeah, and have a great new year, and we'll be back.